What if I told you that spotting market reversal is as easy as counting to 3? The Lawrence highs and low strategy review how to catch market tops and bottom like a pro. No fancy tools, no guesswork, just pure price action. Stay with me. By the end of this video, you will know exactly how to trade with confidence. Hey guys, welcome to Traders Endgame. In today's video, we are going to talk about price action mastering. Master the Lawrence highs and low strategy like a pro. So let's quickly understand what the strategy is in this video. The Lawrence highs and low strategy helps traders to find when the market is ready to change trend. It works by spotting special price pattern that show when buyers or seller are stepping in. Market moves up and down. If we can spot the highs and lows, we can make a smarter trade decision. This strategy is simple and does not require a fancy tool. We just look at how candles are being formed in the market. If you can count to 3, you can use this strategy. Let's break it down step by step so you can start using it today. Let me quickly explain this strategy in details, which is the swing low and the swing high. To use this Lawrence highs and low strategy, we need to understand two important ideas, which is the swing highs and the swing lows. When we talk about a swing low, it's a sign that price may stop falling and start going back up. We look for this pattern when we want to buy at a good price before the market moves higher. So how do we spot this swing low? Our step 1 is very simple. When price is making a lower low in the market and we notice that price is making a lower low in the market, and what will be our response to it? Price creates a series of candle that makes a lower low in the market. We wait for a candle that moves down. This candle moves down a bit, and if you notice, when this candle moves down, this shows that price is falling and sellers are in control. This is important because we don't want to guess where the bottom is. We need to let the market show us. In the other next candle, which is the third candle of it, remember this is our first candle, remember this is our second candle. The third candle of it, we have to understand that price is going to make a higher low, which is called a higher low, and this higher low is very sensitive. This helps us to know that this is the end of our swing low in the market. This shows that the swing low has already formed in the market. This candle is going to be a bullish candle. I can use either blue, I can use either black, depends on what candlestick I want my bullish candle to be. So in this video, I'm going to use the black. When the black, if you notice that black break this second candle, it means that the swing low has already been formed. This signifies that this whole candle here is our bullish swing low, which is the swing low. Remember that anytime a swing low forms, it always signifies a bullish move. No matter what, anytime, remember this, anytime a swing low form, remember that the swing low always signify a bullish move, either a bit. It can be when the swing low form in the bearish market, know that price is still going to go up a bit. So that is it. If you notice in this candlestick, you notice that series of higher low on both sides. This is higher low, this is higher low. If you notice that these two candles could not break our middle candle, this is what we called swing low in the market. So let's quickly talk about our swing high in the market. When we talk about our swing high, a swing high is an opposite of a swing low, like what I explained earlier. A swing high is an opposite of a swing low. It tells us that price may stop rising and start falling. This is useful when we want to sell before the market drops. How do we understand this, our swing high? When we talk about our swing high, we have to wait for a series of swing high. We have to wait for a series of a bullish candle. This bullish candle is going to form when price is moving upward. After that, when price move upward, we still need another candle to form, which is going to be the theory pattern, like what I said. So if you can count 1 to 3, you can be able to understand this pattern. So when the bullish candle form, what do you do next? So when these 2 candle form, this shows that price is rising. Price is rising in the market and buyers are in control. The market is moving higher, but we need to be careful because it may not last forever. That is what the swing high also means. The swing high may not last forever, so it's always have a turning point. We need to wait for another candle to form, which is the 3rd candle, and this 3rd candle is going to be the bearish candle. You understand? This is going to be the bearish candle, and like what I said, I use this as my bearish candle. When price create this pattern in the market and price take out this 2nd candle, know that this is our start of our swing high. So if you notice, there's going to be a lower high on both sides. This is a lower high, this is a lower high, and this is because the lower high could not be able to take out this middle high. That is what we called Larians pattern. This pattern is how we use to spot the swing low and the swing high. This is a lower high on both sides. If you notice on this swing low, same things. This is a higher low and this is a higher low on both sides. So now, since you have already understand the swing highs and swing low, let's quickly look at our chart and see how this pattern is being used in the market. Now let's quickly talk about this daily chart on the Euro USD, and we're going to learn how to spot these swings highs and swing lows in the market. So it's very simple. By the end of this video, you will understand how to identify these patterns and use them to make a smarter trade decision. So let's understand our swing low in the market. Now let's talk about our swing low. Remember I told you that a swing low is a sign that price may stop falling and start moving back up. This is what we look for when we want to buy at a good price before the market rise. If you notice that when there is a series of downward candle at this place, when price creates this candle, what happened? There is no other another bearish candle that break out this our candle over here. So another candle form and it take out this our middle candle. This signifies that we have what is called a higher low on both sides. This is called our higher low on both sides. This an higher low on both sides. This is an another higher low on both sides. If you notice that this is our swing low in the market, what do you notice happened? Price moves up. Price moves up a bit. After price move up a bit, we understand that price creates another swing high in the market. This swings high means that it's very simple, very precise. And how do we know that this is our swing high? When price creates a candlestick like this week, remember this, we have a lower high on both sides. How do we know if maybe it's going to be our lower high on both sides? Before you even decide, you have to zoom very well. You have to zoom very well. If you notice that this is an equal form of high, you can either check it, this is an equal high on the candlestick, but you can either use this pattern to form this, because we have, remember, we have a lower high on both sides. which is this one, because it could not be able to take out the other candle. This is called our swing high. From here, from this place, which is called this one, let me just mark it. This is called our swing high in the market, and it's very simple. Now what happened, we also create a bearish candlestick. When price create a bearish candlestick, remember this our two bearish candlestick, another candlestick form, and this candlestick form could not be able to take out this candlestick low. This makes us understand that this candle here, we have a higher low on both sides, because this candle could not be able to take out. So same thing also applies to this one. When we understand that when price creates a bullish candle and price creates a bearish candle, and what do you notice at this point? We also notice that this is our middle candle here. This candlestick cannot be able to take out this middle candle. We have what is called a lower high on both sides. This is called a lower high on both sides. Same thing also applies to this one. This is what we call Lawrence highs and low. How we can be able to identify our highs and lows in the market using the Lawrence pattern. So this is very simple, guys. Pay close attention. So what happened at this instance? We notice another candlestick form again. Price create a candlestick, create a series of lower low candlestick here. What do? We notice that this candlestick form bullish, but what happened? This candlestick could not be able to take out. It could not be able to take out this our middle candle. This shows that we have a higher low on both sides. Higher low on both sides. Depends, higher low on both sides. This depends, higher low on both sides. So same thing also apply to this our high over here. And we notice that this candle here could not be able to take out our next candle, and this is called our middle. This is called our middle candle, and this is called our lower high on both sides. This forms that this is our swing high in the market. What do you notice happened? Price went up to smash this our swing high over here, and what do you notice? If you can see in this video that there's a series of lower low candle over here, and what happened candle over here, and what happened, this candlestick could not be able to take out this candlestick over here, and we now have a series of higher low candle on both sides. This is called like this. This is what we call a series of higher low candle on both sides, because this higher low candle could not be able to take out our middle candle. This is where a swing high and swing low meet each other. So we also have price move upward, and what happened again? We noticed that price create a series of bullish candle over this our chart, and we noticed that this candlestick could not be able to take out our swing this candle. This signifies that this is our swing high. Remember I told you this is our swing high. So this showed that this is our swing high, our strong swing high in the market. So that is how you spot swing high in the market. So what happened again? And price create a downward candle again, and if you notice in this example, price create a downward candle, and if you can notice, we also have what is called a higher low on both sides. Remember that this our third candle could not be able to take out. This is called our swing low. So this is verified swing low in the market. So that is the reason why you notice that when price pull back to this swing low, price moves upward. So it's very simple. If you notice in this chart over here, we also have what is called we also have our swing high over this chart. So this this swing high is very easier to identify. Remember, it's lower high on both sides. Remember this swing low, we also have what is called a swing low here. Remember, a higher low on both sides, a higher low on both sides. So it's very simple. So it's not complicated. It's 1 to 3. If you can count 1 to 3 pattern, you can be able to understand this Williams simple pattern. So let's quickly look at other example before I call it a day. So this example here now, this example, if you notice this example, we have what is called a candlestick move upward. What happened? We have a lower high on both sides. This is called our lower high on both sides. So this is our swing high. This is what I called, this is swing high. Same thing also applies to this. When we notice price create a series of downward candle, this downward candle was very bearish. So what do you do? When this swing low form, remember that this candlestick take out this low. This is not our swing low. So remember this candlestick over here take out this candlestick over here. This is not our swing low. Remember, in the sense that we have what is called a swing high over here. So if you can remember, I told you that a swing high, we have a lower high on both sides. That is how we identify Williams swing highs. We have a lower high on both sides. This high is not higher than the middle candle, and this high is not higher than the middle candle. This is called a lower high on both sides. So this over here now is going to be our swing high. Remember, there is no swing low over here. So when price creates a series of downward candle, what do you notice at the chart? So remember that when price creates a series of downward candle, and we have another candlestick here, and another candlestick form a bullish candle, and remember this candlestick could not be take out this our second candle. If you can see on this chart, you notice that in this candlestick we have an higher low on both sides, and higher low on both sides. So this helps us to understand that this is our swing low in the market. So now that you have understand the Williams pattern, which is the swing high and the swing low in the market, and it's very simple, guys. It's very simple. So you have to master it in the market. Just open your live chart, maybe on the 1 minute chart. Try to observe the swings highs and swing low in the market. You have to understand that without the swing highs and swing low, you are not going to be a professional trader. So I've already teach you how you can be able to spot these swing highs and swing low in the market. Like what I told you, when you are spotting your swing low in the market, remember you have to have a higher low on both sides. Remember the higher low on both sides. This the third candle cannot be able to violate our middle candle, which is the number 2 candle. And on the swing high also, remember that we have a lower high on both sides. This lower high on both sides forms that the third candle is not going to violate our highest candle. Let me just say, that is it, guys. That it's trader. Now you have a simple yet powerful way to spot the market reversal using the Williams highs and low strategy. Practice it and refine it and make it your own. The Williams highs and low strategy is an easy way to spot market turning points. We look for swings highs and swing lows to decide when to buy or sell. If you want to take this strategy to the next level, watch my previous strategy where I talk about matching the Williams 1 to 3 reversal pattern, a profitable strategy to kickstart 2025. In it, you will understand this concept in a real market condition with live chart example. So don't miss it. If you found this video helpful, like, subscribe, and stay tuned for more powerful trading insights. Happy trading. God bless. Happy trading. God bless.